Hi everyone, hope you're all doing well. Today I thought we'd do a little bit of an update what's going on with TTCF. I currently don't own this stock anymore. As most of you guys know, I did sell out of this stock. I got to the point where I was like, I am fed up with this company. They are not delivering. They look like completely not turning it around. And it did mean I did take a bit of a big loss on this one. But I was like, I just don't want to hold it anymore, because even at the point of where it's at right now, is there a percentage chance that they can actually turn around this business? And I was looking at the management team going, you generally don't know what you're doing, and I thought, I'm not even going to risk it. I'm just going to use the capital I can get back and put it somewhere else. And they posted a update the other day, and I thought, you know what, let's go through it, let's see what's happening on with this business. Have they actually moved into a better position? Well, I'll tell you right now, before we even get onto the update, it was generally one of the worst updates I've ever seen a public company do. So we'll have a look at what they're saying, and hopefully we can use this video to kind of look into this business and kind of, identify what is going wrong with this company, what has gone wrong with the company, and potentially going forward use this as a learning curve, as something to take forward and learn from. So they did their earnings, so they can see here that they posted a bit of an update with what's kind of going on in the company here. Now, it obviously focused on cost reduction because obviously they are burning through money and they don't want to go bankrupt because they have a limited cash pile. But the key thing is that this company did exactly the same thing it has done a year and a half ago, and it's still not learned from that lesson. And that is that it cannot even report its financials correctly in time. So if you look here, the company also announced that it has filed a Form 12B25 with the US Securities and Exchange Commission to report that it will not be able to file its annual report on Form 10K for the end of the year, December 31st, and its due date, and that it is not expected to do so within the 15-day extension period permitted by Rule 12B25. So you can see here they've actually had to once again say that we cannot report our earnings on time. We need an extension, and we're not even going to actually do it on the extension. And I don't know how many times we've seen them. We don't know how many times they've been messing about with earnings where they cannot report them on time. They have to have an extension. They can't report on the extension. They've been doing this for a year and a half. I mean, it's not as bad as the time when they were supposed to report earnings on. Some of you guys might remember this, and this is when I was starting to lose a lot of conviction in the stock. But there was actually a time where they were supposed to report earnings, and then it was like an hour before the actual conference call, and went, "Yeah, we're not doing earnings today. We haven't got time. We noticed we can't do them today." And it was like, you're telling us an hour before earnings that you can't do them. So just honestly unbelievable. And it's unbelievable to see even a year and a half after that they're still having exactly the same issue. So following on from the last earnings update, November 2022, it's focused on cost cuttings. They are designed to achieve an annual cost of 30 million. It is now believed that it can result in adjusted EBITDA and cash flow around mid-2024. We'll see what happens. That was supposed to be in 2023. That's another target that they missed. They said that they now can believe that they can achieve annual cost savings of up to 40 million. Now, I'm not being funny, but they haven't even got to the point of 30 million. So I have no idea why they're saying, oh yeah, we're going to say 30 million, and they haven't even got to 30 million yet. And then they go, actually, it's going to be 40 million. This is like TTCF summed up. Like, they say something, they haven't even delivered on saving 30 million yet, and then they go, yeah, actually it's going to be 40 million. Like, it's just unbelievable to see the crap that comes out of this company's mouth. There's no other way to put it. Which, if achieved, would be allow it to reach break-even EBITDA and come cash flow positive neutral during Q4 2023. So once again, a lot of hope. That's what the company has done previously. They've said a lot of things and not delivered on them. So we'll see what's actually being delivered. They're saying that they're going to reduce 2023 marketing expenses of approximately 15 million. I mean, that 15 million that we're spending in marketing, I don't know what they were spending it on, because clearly it was having no impact on the revenue. So they could have scrapped that months ago. Operation and automation delivered savings of 6 million. That's to do with labour costs. Savings approximately 2 million. With a in-house cold storage facilities. I'm sure we've heard about this cold storage facility for like a year now, so I still don't know how that is taking that long to come and showing the financials, so I won't believe that one either. Reduction in promotional programs. I mean, they're saying they're going to save 7 million from that. I mean, I don't know if that's potentially going to hurt the revenue then. So they might go a little bit more into the profitability or close in on profitability. But I'm sure that will mean that revenue will dive if they cut in the promotional program. So we'll see what happens here. But it did say that it's going to take these steps while driving the revenue higher in 2023. Well, I'll be honest with you, I don't know how they can cut marketing, cut promotional programs and then still expect to be higher. So that's a big statement there. Once again, I'd look at that and go, we've seen your revenue targets you set out previously and how far you've missed them. I don't think you'll be doing them this year either. So once again, there's the company has a history of saying hope and not delivering on it. It says here that they have also now got 24,000 stores across the US, and this number is expected to increase in the 3 months period during March 31st. Now, this is one of the big things that we saw with Tattoo Chef. Like, we saw them, I literally think between them going from like 3,000 stores to 24,000 stores, the revenue like hardly grew. Like, I think it grew like 10%. So one big thing here is like the stores going up hasn't always translated into revenue. So I don't think that means anything for Tattoo Chef. It said they reached an agreement with CVS Pharmacy to open up in 6,000 CVS stores. Same again, I mean, a pharmacy to sell your products, like, I don't think many people will walk into CVS and go, you know what, I've come in here to buy some Tattoo Chef products. I don't think that'll be what the audience that you want to be going for. I think they're probably more focused on getting some paracetamols or something like. So I don't know if that's the best deal ever. We'll see what happens. But they said that they're going to continue the expansion into Walmart stores, with early results indicating greater than 50% sales growth year to date for Q1 2023. I mean, we've heard these things before. I mean, I remember when Tattoo Chef said that Target said that their product is, Tattoo Chef is the best selling frozen food product they've ever had. And look how that ended up on the financials. In fact, I think it might have ended up with Target. They didn't really disclose it, but one of their big clients was massively reducing the products that they were selling. And I think I remember doing a video a while ago, and I think I worked it out as potentially being Target. So careful about what these statements say. I believe it when we see some actual financial proof of it once again. They also said that they are expanding the shelf presence. This is something they should have done 2 years ago and never got around to it. Same as here, they're expanding outside the freezer aisle with their oat butter bars. Same again, this was something that we were told was coming in the back end of 2021. So the fact that it's taken them over a year and a half to get to this point is crazy. They also are offering some tortilla chips. Same again, this is an acquisition that they got ages ago, so I once again, it's taken them ages to kind of get through to sort this out. Now let's go on to the key point. This is a big thing with TTCF. They've always done hope and what to expect, and this is going to be the amazing thing going forward. They've always put big targets out and they've never been able to hit them. At one point, they did actually hit them. I'll give them credit, actually, when they actually came onto the stock market, they were actually a company growing at good revenue growth, and that profit was moving into a bit more positive direction. So at the start of 2021, I'll give it to you that they were actually not too bad, but it's from that period in time, mid-2021, where any things they said they were going to do, they didn't execute on. So let's see what they actually executed on. So net revenue of financial year 2022 is expected to increase approximately 234 million, prior to guidance of 235 million, 245 million. So you can see here that once again, the actual net revenue for 2022 is below what they said they were going to do. So once again, we're seeing what have they actually, there's all this, what they are going to do with cost reductions and everything like this, and upping them targets that they haven't even hit yet. What have they actually done? Revenue. Revenue has missed targets once again in the back end of 2022. Not good. This is what we said. They talk a big game, and then you actually look at what they do, is poor. And once again, the revenue is a big, massive miss. Gross margins for financial year 22 is expected to be approximately negative 4-5%. So basically, their product they're making is costing them money to make. Not good. And this is compared to prior guidance of 0 to 3%. So this is once again massive amounts of a big, massive miss on gross margins. Once again, let's look at what they've delivered on. Not great here. The company expects cash at the December 31st, 2022 to be approximately 6 million. So the company is continuing to require additional debt or equity capital and is pursuing multiple paths of opportunity to raise such capital as soon as possible. So this here is basically Tattoo Chef coming in. We need capital. If we don't get capital, we're going bankrupt. So that's basically what they're doing. And we've seen them basically have this statement in the last kind of 2 earnings. The fact that it's taken them this long and they're running so low in capital is never a good sign. That suggests that potentially they are struggling for someone to give them capital. So that's a big issue. Now, when you look at Tattoo Chef, if we look at the financial health of the business, so last time they posted their last quarter earnings, they actually had 14 million in cash. So they have gone from 14 million cash in 3 months down to 6 million. So they are losing capital rapidly. That's what's happening in basically 3 months. So they've halved the cash pile in 3 months. And if they go through the same sort of run rate in Q1, then basically they're going to run out of capital in the next 3 months. Well, considering that it is already December the 31st and we've already had January, February, basically into March, we would probably suggest that Tattoo Chef basically has enough capital for 2 months at the moment, depending on how fast some of those cost cutting have kind of come into play. So yeah, considering at the moment, yeah, they probably basically have 2 months of life left to get capital. At the moment, it looks like no one's going to give them the capital. So more than likely in the next kind of, before we get the next earnings, more than likely, which would have been around June time, more than likely we'll have to hear about them having some capital or this company's going bankrupt. Simple as that. They are not in a good way at the moment. So we'll have to see if they can raise capital. Now, the problem is that when you're burning through, you're burning nearly 7 million a quarter, Tattoo Chef is currently worth 124 million market cap. To get them through a year at the moment, if we have a quick look here, they're burning through around nearly 98 million a year here. Let's just say like they do the current run rate, which is about 6-7 million. Let's times that by 4, so 7, 14, 21, 28 million. The company basically needs to get around, let's say it raises 20-30 million, around that range in the next 12 months. The problem is that you're going to have to get someone that is willing to give this company here that's got these issues at 124 million market cap 20 million. You're going to need someone to give Tattoo Chef 20% of its market cap. So, I mean, that's probably why no one's touching it. Why are you going to give them 20% of the market cap when the company's losing, 100 million a year, that has missing the financial targets, that has negative gross margins, that has all these issues going on? No one's going to touch it. So the only way that someone is ever going to touch it, if they actually look at the either the factories, or if they look at the brand and go, yeah, you know what, we might be able to make this work. We might be able to mass produce it a lot better than what they are. The only way is if someone's staring at this and going, we'll have the brand, or we'll have the factories, or we'll take up the factories and we'll take the brand and we'll reduce the brand down to one of the factories and we'll use a couple of the other factories for our other brands. That's the only way someone could tactically probably play this at the moment. So I think that probably the best way is that either someone buys a stake in it or someone buys the whole business. I think that's the only way they're going to get probably someone to purchase this at the moment, because I don't know who else will touch it. So I think it's going to be a big couple of months for Tattoo Chef, because they will need to get the cash raised by that time frame, and we'll see if they're able to do it anyway. And maybe we'll do an update when there's some news here and see if they have been able to turn it around. So yeah, we'll see what happens there. Hope you enjoyed the video. Catch you in a bit.